So did your mutual fund SIP take away your gold bonanza or the gold jackpot? Gold has given more than 30% returns in the last 1 year, whereas the stock markets have given around 8%, and mutual funds have given from 8% to around 21% maximum. And what about SIPs? If you had done a gold SIP in the last 1 year, you would have got 54% returns, whereas SIPs in mutual funds have given negative to 4% to 4 or 5% positive. That's it. So did you make a mistake in investing in mutual fund SIPs and not investing in gold? So what about the future? Should you continue investing in SIPs, mutual funds, or you should shift to gold? Well, there are all these questions you may be having. I also had. But then, today, all these questions will be answered. There's a good analysis that I've done, the deep analysis that I've done for the last 15 years. And there is a lot to cover, whether it is lump sum investing or whether it is SIP investing, whether investing for 15 years, 10 years, 5 years, 3 years, 1 year. All time periods I have covered. And you will know today whether you should continue investing in mutual fund SIPs or you should switch to gold entirely, or you should have a balance, and which should be more, which should be less. Yes, let's see all that today. Hello, if you're watching my videos for the first time, I'm Franky Fernandes. I'm a certified financial planner and I've got experience of more than 30 years in the mutual fund industry. And I'm also married for 24 years. And my goal is to help young families to grow their bonds stronger and invest together as a team. And by doing that, you both will actually do well in your wealth or in your relationships. So if you are watching this alone as a husband, I request you to invite your wife or tell her whatever I'm going to talk to you today. Her financial literacy is very important for you and your marriage. Yes. And if you're the wife who's watching alone, I encourage you to call your husband, because financial literacy for both is very important. Yes. So let's watch this interesting video today. And after this video, you'll be able to decide what to do. You'll get a lot of clarity. So what we'll do today is, number one, we will look at lump sum returns. What if you had invested in gold? And what if you had invested in mutual funds like large cap, mid cap, and small cap? So what I've done is, I have looked at SBI Gold ETF data from the last 16 years, that is 2009. And I've also looked at some other ETFs and gold bonds for doing this analysis for gold. And on the other hand, I have taken large caps, mid caps, and small caps, the top 10 mutual funds for computing the lump sum returns. That is the first part. Second part, I'm going to take you through SIPs. What if you had done SIPs in gold ETFs and compare them with your SIPs in the large, mid, and small cap? So here, because of the limitation, I could only take 5 funds. I've taken the top 5 funds, which will help us compare. Then we'll also look at, the third thing is, we'll also look at, is this the first time that we are seeing such jump or such spike in gold prices, or has it happened in the past? And we look at all time periods, whether it is 10 years, 5 years, 3 years, 1 year. We look at all these 4 time periods to see if there is a similar trend in the past. And if there was, how do we interpret today? What does it mean for us today? We'll also look at the chart. We'll compare the gold chart and the Sensex, which is the large cap index. And finally, we will see what we should do for the future in terms of our SIPs and lump sum investments, right? So number one, we will look at the lump sum returns. So here is what if you've done lump sum investments. So I've taken gold ETF, large cap, mid cap, small cap, and I've just taken an average of the mutual funds. So let's take a look at time period 1. What if you had invested a year ago in gold ETFs? How much you would have got? 32. which mutual funds are comparable? Probably mid cap. But rest, small cap or large cap, or if you had a assorted combination like flexi caps or multi caps, probably this would be your return. But nothing like gold. 32%. Amazing, amazing returns in this last 1 year. What about 3 years? 21.3. Anything that is comparable, probably mid caps. Small caps, or you take large caps, they're much lower compared to 3 year. This is a 3 year CAGR, compounded annualized returns. What about 5 years? 13.76. For 5 years, all the categories have actually done better than gold ETFs. That is gold. You've got 22% large cap, you've got mid caps, you've got small caps, right? So average is around 29, which means in the last 5 years, if you had invested in some of the good mutual funds, definitely you have got better returns. Now let's take a look at the 10 years. Now in 10-year category, gold is given 12.66. You have large cap around 12.2, almost the same. But the mid caps and small caps are clearly the winners. They are way above gold. And what about the last 15 years? 11.24. And clearly, large caps, mid caps, small caps are clearly the winners, even on average. So the win, if you really look at closely at the lump sum investments, gold has done well in the last 1 year. The verdict is that in the last 1 year, they've done great. In the last 3 years, also, they've done great because none of the mutual funds are comparable. Probably just mid cap is very close. And these are the average returns, right? These are not one or two funds. This is the average of around 10 funds, the top 10 funds. And here, in 5 years, 5 year time period, clearly the mutual funds are the winners. So if you have invested long term for the last 15 years, 10 years, 5 years, if you have invested lump sum, you are still better off than gold. So you haven't lost much. But if you in the last couple of years, if you have invested the last 2-3 years, you have probably got less returns. But there is a rule that we all follow, and that is never withdraw before 5 years from equity. So you have not really lost. If you have invested anything for 5 years, you are safe. You don't have to worry. Although your returns could be less now, the next 5 years it will really go up. So this was about lump sum. Now let's take a look at the SIPs. Probably that will be interesting. So now let's take a look at time period 1. If you had done an ETF every month, if you had invested every month in a gold ETF, 54.2 would have been your SIP returns. Amazing, phenomenal returns. Nothing is comparable. In fact, equities have given you negative returns. Let's take a look at 3 years. Again, gold ETFs is clearly a winner, 31%. Mid cap is probably close, but if you look at large cap, if you look at small cap, and also an average, much lower when it comes to SIPs. 5-year SIPs, 21.5. How about large cap? Less. What about mid cap? Almost the same. What about small caps? The winner. So on average, probably both are equal. 5-year SIP, whether it is mutual fund or gold ETF, same. Now 10 years. 10 years, you've got 16.3, but mid cap and small caps are clearly the winners. Even on an average, they're better. That means if you had a flexi cap or a multi cap, then you would have definitely got better. Large caps are slightly lower. 10-year period, this is slightly lower. Now for 15 years, obviously, large cap, mid caps, small caps, or even an average are clearly the winners. Gold ETF is lower. So if you have done SIPs for 15 years or even 10 years, you're better off. 5-year SIPs, yes, gold ETFs have done better. Clearly here, they've done better. Now, when you look at the SIPs or lump sum, they both are poised equally. So it is not that gold has been very superior. In fact, in long term periods, SIPs, mutual funds have done better. In the shorter term periods, gold ETFs have done better. Now, there are two things we need to think. First of all, because gold has done better in the short term, should we now just go and invest for short term in gold? That is a question. And second question is that why has this happened? What this tells us, has it happened in the past, or is it the first time it has happened? And so for the future, probably this will continue to happen, right? So this is what we need to see. We need to look at whether there are trends in the past similar to this, and what do these trends tell us for the future? And then how do we invest for the future? Very important. These are eye openers for us, because maybe for the last maybe post COVID, we haven't heard much about gold. Probably one time when the markets fell, and that's what we're going to look at in the next slide. We're going to look at both the gold ETF and BSE Sensex chart to see clearly what is happening really. How are these two? How they two look together? Yes, let's take a look at this chart. We'll just spend a few minutes here to get an understanding about their relationship. So if you look at the start, I've actually made them start together from 2009 May. So if you see they started together, but then when the Sensex went down, you have the gold go up. And then the gold came down, and here we see the Sensex go up. They intersect here again, but again we see here the Sensex go up and gold slightly go flat here, very slight increase here, and then comes the COVID, right? Here is the COVID period. And here what happened? Here we see that Sensex fell here. And what happened to gold? Gold went up here, straight. If you see here, see the steep. And then gold fell here, while the Sensex went up here. Again, and it came down here. Gold, if you see, slightly going up here. But from here onwards, we pretty much see that both are up. Sensex is up and gold also is up. But this period is where we see that Sensex has fallen because of the uncertainty, because of the tariffs, uncertainty of this trade war, expectation of a recession, and dollar probably losing its value. So a lot of these things happening, and here we see that gold has gone up steeply, right? So we see here the journey. Most part, there is a negative correlation, but then there are some parts when they both are almost the same. So when you look at this data, it tells one thing very clearly, and that is very important, that this trend that we see here going up has also happened in the past. If you see here, it has gone up, it's gone steeply up, gone steeply here up, and here now it is gone, and here it is steeply gone up. So it is not that this is the first time it has happened. And what about gold? Has gold fallen? Is it volatile? Yes, it is volatile, not as much as the Sensex, as much as the stock market. So gold has fallen here. If you see here, it has fallen here. It is flat here. It has fallen here. And if you notice, it has fallen here soon after this rise. Here also it's a steep rise. Is it going to fall? I don't know. But it's very clear that if the stock markets go up, I'm very bullish, then the gold may actually lose its sheen, lose its shine. But I don't know about the future. I'm not an expert in gold. I'm not an expert in metals. So I do not know much. I work with the mutual fund industry, but this is something which is very interesting. And the next slide is very important to know what are the trends. Has this happened in the past? And what do we infer from this? Just hang on. Seeing the trends of on the chart, how gold has performed and how Sensex has performed together, parallelly how they have done. And we've seen that there is volatility in gold as well. Maybe not as much as the Sensex, but there is volatility, and we have seen sharp spikes and falls because of which there could be positive returns and negative returns. So to actually know, now the big question is, should we invest in gold going forward? Should we really continue investing in mutual funds, SIPs? To know whether what to do for the future, the best thing is to look at the past history. How have both the Sensex and the gold, especially how gold is performed, to make a decision about gold? And I'm going to share with you some very good insights about what has happened in the past. Now, to do this analysis, I had to really analyze. I used some AI to do this analysis. I've gone back the last 15 years data, which I talked about. This is the gold ETF, SBI gold ETF data. So what I've done is I created some scenarios, simulated. What if I had invested right from 2009 every 6 months and withdrew every 3 years, 5 years, and 10 years? So this is the rolling 6 months returns. Just to see if I had invested 15 years back in gold. I was a regular investor in gold, and every 6 months I used my bonus or my saved money and invested in gold. And if I withdrew 3 years, 5 years, 10 years, what kind of returns I would have seen? And also, I also created a scenario where I invested every month and I withdrew every year. That means if I invested in June 2009, I withdrew in June 2010, then I again invested in July 2009, August 2009, and I kept on investing and withdrew. So I created these scenarios, right? I kept on investing every month and withdrew every year to get 1 year return, but this was a rolling 1 month. So I wanted to capture as many scenarios as possible, because if I was a regular gold investor, I would have invested regularly. So let's see what are the findings. So here I took the 10-year. So there were several scenarios, but I just picked up 3 of them which are similar to what we see now. In the last 10 years, we've seen 12.66% a CAGR return, right? And then going back 10 years. So I looked at those scenarios where there was some phenomenal returns. So one is, if you had invested in 2014 and withdrawn in 2024 November, this is what you would have got. And similarly in May 2014, and even as old as 2010. So the returns are almost similar, but it's less, but this time the 10-year return is high. So then I also captured these 5-year returns, right? As I mentioned, every 6 months I invested and I withdrew. 5 years. So there were several instances. I picked up the top five where you've got some very good returns in 5 years. That is 17%, 15%, 14, 13, and 13. So this is all invested in 15, 18, 19, 18, and 19. And the current CAGR that we just saw, for if you had invested 5 years back and today you would have gone 7.6. Similar returns, in fact, better returns we have seen in the past. If you had invested even in 2015, in 2020 November, you would have seen 13.2% returns. Of course, these are more recent. If you had invested in 2019 or invested in 2018, you would have seen these returns. So it is not that only now we see these returns. So now that we have seen 5 years, now let's take a look at 3 years. 3 years also, the current CAGR is 21.30 for the last 3 years. That means if you had invested 3 years ago, today you would have seen 21.3 as CAGR. Did we see similar returns? Yes, we have seen, in fact, more than that. If you had invested in 2009 and withdrawn in 2012, see the returns. So here there are returns which are more than the current period. And of course, there are other periods also where we have seen some very good returns. But if you had invested in 2009 and withdrawn in 2012, you would have seen similar returns. Right? And we have seen it in the chart earlier that in 2009 also there was a spike. And finally, we see the 1 year. I invested every year, every month, and withdrew every year. What could be the return? So there are many instances because it's a monthly rolling, but I've taken the top, probably the top 15 to see what are the kind of returns. Currently, we have got 32.22% returns in the last 1 year, but we have seen instances like this and even better in the past. If you'd invest in 2019, 2010, 2011, 2010. So even if you had invested earlier years, you would have still seen such phenomenal returns. In fact, in 2019 to 2020, when the stock markets were down, but the gold markets went up, you could have seen this return. So what does this tell us? That today, what we are seeing, this hype about gold and gold breaking all barriers and gold reaching 1 lakh. After all, it is the returns. It is not the number, the absolute number. It is the returns. Sensex has gone and become 80,000, or Nifty is 25,000. So those are just the numbers. What is more important is the returns. So these kind of returns is not the first time. We have seen it in the past. Now the big question is, does gold give negative returns also? Has it given negative returns? So if you invest today, just because the gold are at all-time high, if you invest today, can you see negative returns in the next 1 year, next 3, 5, 10 years? Let's see. So I did not find any negative returns for 10 years. That means for a long-term period, for a long-term investing period of 10 years, you will never see negative returns in gold. At least in the past, we haven't seen. In the future, I do not know. The probability is low that you will have any negative returns in the 10 years horizon. But 5 years horizon, yes, there have been 4 instances of negative returns. In the 6-month rolling, if I had done probably 1 month rolling, I would have seen many more instances. And in the 3-year period also, so this is the 5-year period, even in 3-year period, you see there are 4 instances of negative returns. So if you invest now, probably in the next 5 years, there's no guarantee that you will not see negative returns, because the markets are at peak, more likelihood of it coming down. I don't know, but beware, we have to be careful. And finally, for 1 year returns, so those were 5 and 3 years. For 1 year, the numbers were too many because I had monthly rolling. So I saw 49 instances in the last 15 years, monthly rolling, where there were negative returns, ranging from minus 0.11 to even minus 16%. That means in a year, if you invested 100 or if you invested a lakh, you would have lost 16,000 in a year. So that is possible. And 10 times, it has been below 10%. That means 10 times, if you had invested a lakh, you would get 90,000 back in 1 year, 10 times, and 15 times below 5%. So 10 times and 15, 25 times. So there are another 25 times where 24 times where there have been many negative returns. So gold is not immune from negative returns. There are negative returns. So now the question is, so what do we do? What should be our strategy for the future? Should we invest in gold? Should we continue to invest in mutual funds? Should we invest in both? Which is better? You have seen all the slides, you've seen the recording. You can make this judgment. Please talk to your advisor. And this is my advice. And this is my analysis based on all that I have shared just now. I have covered in several of my videos in the past, even my recent video on calm in the storm. I have talked about asset allocation. I have a separate video on asset allocation. So asset allocation is a must, and you must have for short-term bond funds and hybrid funds, that is less than 5 years. You must have gold ETFs. I'm not talking about jewelry. I'm talking about gold, physical gold, and I'm focused more on the ETFs because I don't have to carry the gold with me. But there is a gold that is backed by this ETF as an asset class. 5 to 10% makes sense to have it as an asset class. I do not have so much. I'm actually slowly building. I started investing. I invested in August 2024, and today I have got already around 35% returns, which is close to 60% annualized returns. But I stopped investing because the markets crashed in September, October, and gold started going up. And so I have some exposure. I started doing ETFs, but right now I am not. But it is a must to have an asset class of gold, and gold should be for long term, not for short term. As we have seen, in 5 years there is a possibility of negative return, so there is some volatility, and gold is considered as a safe haven. Gold goes up whenever the economy is shaky. There is recession, there is inflation, there is a dollars under pressure, there is a weakening of dollars, especially the US economy. All that when it happens, especially right now because of the uncertainty about the tariffs, the trade war, and the announcements which Trump has made. That's the reason why gold is rising. Plus, in India, there is a rupee depreciation every year. 2 to 3% of depreciation happens, because of which gold goes up. So gold is a safe haven, which means when the markets are down and you have a financial goal and you do not have enough money for that financial goal, gold can come to your rescue because gold has gone up. For example, if you want to withdraw in the last few months, 6 months, if you had to withdraw from equities, you could not. And what if you had a financial goal, or what if your financial goals lacked that funds? Gold is the right investment to withdraw, because you can actually go to gold because gold has gone up. So gold is useful in that sense. So SIPs are always better than lump sum for any investing. Hence, I would recommend doing an SIP, a small amount in gold ETFs. But for financial goals, continue your SIPs in large, mid, and small caps for financial goals. If you want to know what are the highest returns that equities have given in 1 year, 3 years, 5 years, 10 years, 15 years, and also their negative returns, watch my video where I've talked about markets. Stock markets are risk-free, risk-free 7 years, and also another video on SIPs. So both these videos actually have covered the daily rolling returns and what kind of returns equities give. So compared to gold, whether it is 1 year, whether it is 3 years, 5 years, 10 years, 15 years, the highest returns are much higher than gold. Gold historically has given 10%, 10 to 12%, and that's what we have seen in this video. So there are instances in 10 years where you have 10%, 7%, not all the time. So gold on an average will give you so much. But we have seen equities on an average give 15% and more, especially the active funds. So my recommendation is that continue your SIPs for large, mid, and small, for your financial goals, having large, mid, small caps and flexi caps too. Because for long term, no investment option can beat the market. No investment option. So that is my conclusion. Talk to your advisor before making these decisions, but I would not put all my money into gold. I would restrict, I would continue to invest in equities. Because I believe in equities. Looking at the past data, I believe the future is bright for equities. It is brighter, and it is brighter than gold's brightness. And that is what is my final conclusion. So I hope you have some takeaways from this video, from this analysis, and all your apprehensions about gold. I hope this video has addressed, it has given you some insights. Yes, do talk to experts before making any decision. But this is what I believe, that when it comes to long-term investing, when it comes to financial goals, SIPs, equities, mutual funds are still the winners. If you liked this video, please give me a thumbs up. If you did not like, please give me a thumbs down, show a thumbs down, and let me know in the comment box why you didn't like it or what you liked about this video. If you are new to this, to my channel, I encourage you to subscribe and be a part of this community. And I hope to see you soon again with my next video.